My guest today is Ethan Abramowitz, and he is the person high earners call when the disability policy they bought years ago suddenly refuses to pay. So, for nearly 4 years, he sat on the other side of the table defending insurance carriers. And for well over a decade since, he has represented physicians, dentists, and attorneys fighting denied and delayed disability claims. So today we are putting that experience to work on the front end, walking through the decisions a buyer makes from own occupation language to the coverage a firm provides, and what each one turns out to mean the day the claim is actually filed. So welcome, Ethan.
Thank you for having me. It's a pleasure.
Yeah. So, in your 14 years representing professionals whose disability claims were denied at Seltzer and Associates, tell me what attorneys misunderstand about their coverage when they buy it.
Well, I think the biggest issue or misconception people have is the definition of what own occupation coverage is. So own occupation, it's an umbrella term, and underneath that, there's different tiers of coverage. So true occupation or regular occupation is really the Cadillac coverage, which is what most people subjectively believe they have when they have own occupation coverage, which is an injury or sickness prevents you from working in your occupation. It doesn't prevent you from working or affects your benefit if you're working in another occupation. So you get 100% of your benefit and 100% of the income from the new occupation without any offset. Where I think a lot of people stumble is, especially with the group products provided by employers, or if they don't elect the higher riders when they're talking to someone like yourself, is they think that coverage is true own occ, but really what we refer to as a modified own occupation policy, which is if you can't work in your occupation and you're not working at all, yes, they'll honor the full benefit. But as soon as you step your foot back into other work activity, you then fall into the partial disability or residual disability analysis. So I think that's the first things people on your end that you're talking to on a daily basis really need to get their arms around is what is the coverage that my employer has provided me with, and what is it that I actually need future goals and financial planning. And this is especially important for physicians and dentists, where something as simple as CMC joint arthritis, the base of your thumb, can prevent you from being a surgeon, an anesthesiologist, a dentist, but doesn't prevent you from doing anything else that you might be able to do. And when you have that modified definition, it really inhibits your ability to go forward into the workforce pursuing other passion projects without potentially jeopardizing your benefit. And a key example of this would be, some OBGYNs and other doctors I've worked with that have that modified policy or the group policy or both. And let's say they had to stop clinical work, but they had such a good relationship with their employer that they wanted to stay on as a medical director. So for one of my clients, she became totally disabled in her late 30s. And she was making good money, but she hadn't worked her way up all the way through the tiers where she was making significant physician money. So she was making around $250,000, $300,000 a year. Rheumatoid arthritis comes along and takes her clinical career away from her. Her employer offered her a medical directorship position where she's still involved with the residency program and really giving back to the program that she dedicated her early career to. The problem has been that because of the product she has, that her earnings are such where instead of receiving the $15,000 a month in benefit she was receiving when she was totally disabled, it's gotten whittled down to 2 or 3,000 because her earnings from the medical directorship have increased over the years. And that's something where a true own occupation policy, she would get the $15,000 a month in monthly benefits and 100% of her salary, and there's no offset.
So, was that a group policy that she had that had the modified ONOC, or was
It
that an
was
individual
both.
policy?
It was both. So
Oh,
the individual policy had the modified own occupation, not a true own occupation definition.
wow.
And then because her group policy was based on monthly earnings, and we can get into this later, but that's a common misconception with group policies or employer-provided long-term disability policies. There's something called covered monthly earnings.
Hmm.
And some of those policies limit it to total earnings, or not limit, but include total earnings. Other policies limit it to your base salary and exclude extra comp, RVU, bonus comp, or true ups that happen throughout the year, production-based incentives. So for her her group policy was only based on her base salary. And as her income increased with the medical directorship, she exceeded the loss threshold to be eligible for the long-term disability coverage.
Hmm.
So she actually lost that benefit entirely.
Wow. So, how important do you think own occupation is for attorneys specifically? As a because for an OBGYN, when you're doing some clinical, you're doing some, surgical, it tends to seem a little bit more obvious. But what about attorneys?
I think it's, equally important that in our field that there's so many aspects of our job that aren't just cognitive related, that there's physical components, the ability to sit at your desk for extended periods of time, going through voluminous amounts of information. And for litigators, the ability to get up and sit through, weeks, days, whatever it may be, your trial schedule. So there are a number of attorneys I've worked with over the years that have varying degrees, of medical conditions that have taken them out of practice. Certain conditions have taken them completely out. Others have rendered
Mhm.
them partially disabled, where they've had to cut back and have a qualifying loss of earnings that triggers the partial disability benefit. But the physical and cognitive demands of practicing law really fall into the ability to put in really long hours.
Mhm.
And there may be a scenario where you don't have the ability to sit at your desk for 8, 10, 12 hours a day, let alone sitting through
Staring at a screen. Yeah.
staring at a screen. So I've worked with doctors that have visual impairments. I'm sorry, lawyers with visual impairments, lawyers with Parkinson's disease, um, traumatic brain injuries, and
Wow.
other physical degenerative issues that have really limited their ability to tolerate both the physical and cognitive demands of the occupation.
So walk me through, let's say there's an attorney and they have their own individual policy, that's ONOC, and they have just a typical group policy through their employer. And like you said, maybe they have some kind of, like they had the traumatic brain injury, or maybe they had the cognitive type of impairment. What would that look like in a claim scenario?
As far as their ability to pursue other careers, or
Or just how would the policies pay? How would they look at, how would the individual policy look at that situation, and how would a group policy look at that
it's a great
situation
question.
from a claims perspective?
From a claims standpoint, an individual policy typically will look at how the lawyer performs their occupation day in, day out, the material and substantial duties that they're performing. Okay, a group policy really relies on a national economy definition. So they'll rely on the Dictionary of Occupational Titles, the EDOT, the ONET, these other generalized definition sources that really kind of utilize generic physical demands and generic cognitive demands.
Okay.
So it's more of we're not looking at what Ethan Abramowitz does day in, day out. We're looking at these rubrics. And talking about the differences between how individual disability claims are administered and how group long-term disability claims are administered. I always joke it's a two-pitcher of coffee conversation, because individual policies are governed by pure state insurance law. All right. So there's bad faith components. The insurance regs govern, where the long-term disability products are governed by ERISA. It's a
Hmm.
federal statute that really shifts the burden and the scales in favor of the insurance company, where when they're looking at claims analysis and claim determinations, they really, in most cases, if they have discretionary review or discretionary authority, it's an arbitrary and capricious standard. So is what the insurance company did reasonable based on the information they had? And it limits, without going into the entire ERISA appeals process and how that's drawn out in the courts, it just shifts things significantly in the insurance company's favor. And the way those
Hmm.
claims are administered and handled are night and day compared to individual disability insurance claims.
So have you ever experienced somebody who maybe their individual policy does pay, but these ERISA policies refuse to pay?
It happens all the time.
Like, do
And
you have an example of like how, because I'm just thinking a lot of attorneys that we talk to, a lot of them say, I work at a great firm. I've got a lot of, I've got this group policy. It'll take care of me if something happens.
yeah, so a claim a couple years ago, actually, it wasn't an attorney, it was a doctor, but the individual company paid quickly. The group company did what's known as a peer-to-peer call with the client's treating physician.
Hmm.
And the client was actually still working, but not in their occupation.
And what was the nature of the claim?
It
Like,
was
was it a
arthritis.
sickness
It
or?
was, yeah, it was a sickness. So it's
Mhm.
arthritic issues, spine, with other
Yeah.
components affecting her arms, her back, her legs. But she stayed on working, just not in the clinical component. And when her physician filled out the attending physician statement, which is the statement, a form that the doctor completes outlining the diagnosis, objective medical, subjective complaints, and what's known as the restrictions and limitations, what someone can't do and what they're limited in doing. The doctor specifically noted that Ethan Abramowitz cannot work as, and this was a vascular surgeon,
Hmm.
cannot work as a vascular surgeon, but support him working in this other capacity. The company's reviewing physician does a peer-to-peer. During that peer-to-peer phone call with the certifying doctor, asks, in essence, did you ever advise Ethan to stop working? Well, no, he is working. And kind of geared and directed those questions down the road of Ethan's still working, not can Ethan work in his occupation. And
But
based on,
any kind, so basically it becomes like an any occupation. You're capable of doing something or you're earning money doing something.
well,
We don't have to pay your claim.
what they ended up doing was saying, well, the doctor in our peer-to-peer advised that you're not disabled and you can work and that they support you
Wow.
working. And because that policy was an ERISA governed policy, our client had to go through the full appeal process. So
Wow.
we had to, what they often do will, that the insurance company's doctor will put together a brief summary of the call. And then they mail that off to the doctor and give them 3 to 5 days to review it. And if they agree with it, to sign it and send it back. And there's a little portion that if you disagree, please explain.
Hmm.
Well, this doctor was busy, as many doctors are, and didn't see the letter come in the 5 day window. So when we eventually got the denial letter and our client went back to the doctor, she's like, what the heck? And
Yeah.
we gave, she presented the letter to the doctor and she's like, yeah, this isn't what we discussed in detail. Yes, I said you're working, but I also explained that you're not able to work as a vascular surgeon. And what we ended up doing is having that doctor put together a comprehensive response to that, as well as identifying all of the objective medical evidence. And it dragged it out for another couple months where the
Wow. And
individual
meanwhile, they're
company
not
spent,
getting paid until all of this is resolved, correct?
and because it's
Yeah.
governed by ERISA,
Yeah.
you have to go through the appeals process. You can't just jump into federal court.
Wow.
You're precluded. So you have to walk through this process. And they know that. So we see a lot of long-term disability claims get denied for ticky-tacky or arbitrary or nonsensical reasons. And the worst thing that happens is they just have to put you on claim and pay the retrospective benefits.
Wow. So how does that also pull in Social Security? Because I know, and maybe you can talk about this too, what the laws are about a lot of group policies requiring you to also file for Social Security. Maybe walk us through that process as well.
So group policies are inexpensive and watered down and filled with terms and conditions designed to mitigate the insurance company's liability. Within every long-term disability policy that I've come across, there is a deductible source of income section or other income benefit section, which allows them to reduce the long-term disability benefit or their liability. So Social Security is in every single one of them.
Hmm.
And what it allows for them to do is if you've been out of work for 6 months and you're not working at all without the likelihood of going back to work in the next 6 months, so you're out for a year, they can require you to apply for Social Security disability.
Hmm.
If you don't apply, they will automatically offset your benefit by an estimate.
So if you choose not to apply, you just maybe this person is so sick, they don't have the energy, or they don't even know they need to apply, they might just automatically get a reduced benefit without even having that knowledge.
Correct, but the flip, well, they do know as soon as they send out an award letter, it's the first thing in there. You must
Okay.
apply, upon
Wow.
our request. I've had
Hmm.
certain cases, and it's few and far between, where it's the own occupation covered foot modified, but the client's so severe it's clear that they can do other work even though they're not there. But after they hit the 1 year mark, automatically you need to apply. I've had
Okay.
other clients where literally, the client can't work as an orthopedic surgeon or a dentist, but they can do something else, but they're still trying to figure out what's going on in their life. They're still pursuing medical care treatment. They may have just had surgery and in post-op recovery still, and they get the letter to apply. And what I'll do is I will send the company a letter and say, are you advising that your internal medical reviews support the fact that our client is unable to work in any gainful occupation? And the Social Security definition is much higher. It's in any gainful occupation based on education, training, and experience. And there's also an economic component where you cannot earn more than, and it changes every year, like $1,600 a month. So more often than not, they say,
Do they change that per occupation? Like, would it be different for
no,
a
it's
high
just
income
based on
professional
so.
than it would be for a blue collar
No,
person? I
that's
mean,
just,
like,
it's governed by Social Security and what their criteria is, and it
so if
changes
you're
every year.
capable of making more than $1,600 a month, they can just deny
So
regardless of your condition.
Social Security,
Not Social Security, correct?
yes, yeah.
Wow. Wow. I
So
actually know that from personal experience. My mom was waiting for a double lung transplant. She was an executive, clearly, I mean, immunosuppressed on tons of oxygen, couldn't work at all, and and was required to file for Social Security, got denied, had to go and apply again. They wanted her to come in person, and I mean, getting her to a Social Security office in person was a huge to
mhm,
do. It was
yes.
unbelievable.
Well, the Social Security process right now, fortunately, I don't practice Social Security. I've got a firm that I refer everything out to, but tangentially, I've had to deal with it over the past decade plus. But that process has gotten so drawn out.
What
I've
is the
had
typical length? Do you have an idea how long it takes to get a
it varies. I mean, I've had clients get approved right away. I've had clients be denied, have to go through the appeal process, get denied, and then have to get to the administrative law judge, which the longest one took 3 years.
Oh my God.
I mean, there was a 3 year retrospective
So
benefit
during
that was
that
paid.
period, if it's taking 3 years, are they not getting that proportion of their group policy?
If they haven't, they have to sign a reimbursement agreement,
Okay.
which then results in an overpayment.
Okay.
That has to be addressed because they owe the money back to the insurance company. I was, someone who reached out to me recently. This case kind of broke my heart. Same type of thing where the covered monthly earnings were limited to base, and this person had a high bonus production based structure. So her benefit and the policy, the way it was set up, was limited to $5,000 a month. Okay. And then because she was such a high earner, her Social Security benefit that she would be entitled to was like over $3,500 a month.
Hmm.
So even though she was highly underinsured with her long-term disability coverage, $5,000 a month, the dollar for dollar offset, her long-term disability benefit ended up being like $2,200 a month.
Wow.
So it
Wow.
doesn't add on to it, it subtracts and keeps you at that $5,000 a month. And if you
Wow.
don't have, fortunately, she had individual coverage as well. But for people that don't understand the terms and conditions and think, well, I've got a $10,000 a month long-term disability benefit, and I'm going to be eligible for another 3,000+ from Social Security, I can get by on 13,500 a month. But really, no, it's still back at 10,000. And on top of that, Social Security is taxable. And depending on how the long-term disability premiums were paid, that benefit's taxable as well. The
Wow.
beauty
So
of
like if it was an employer policy, then that
yes.
part's taxable too.
So the difference between individual policies and group policies is there is typically no offset for Social Security disability. You
Hmm.
get 100% of your disability benefit from ABC, and you get 100% of the Social Security.
Hmm.
The other thing is that, more often than not, the insureds, the professionals are paying the premiums for the individual with post-tax dollars, resulting in a non-taxable benefit, which without that, on the long-term side, you're paying anywhere from you're losing 20+% of your benefit every month, depending on what your tax bracket is, to taxes.
Wow. Wow. Okay, we're going to take a quick break. Let me just click on this. I need to see the time. So 25:36. Okay, hold on. All right,
No worries.
we're talking to Ethan Abramowitz from Seltzer and Associates. When we come back, what the words own occupation actually decide when a lawyer or professional files a claim and why attorneys pay less for this coverage than they think. All right. We're back with Ethan Abramowitz, the attorney high earners call when a disability policy they trusted stops paying. He has spent well over a decade watching how these claims really get decided. So, Ethan, you mentioned something really interesting that I wanted to address. Like you mentioned how somebody had a policy or they were paid a small base salary, but they had a lot of bonuses. So we work with a lot of attorneys and high income professionals thinking, people on Wall Street or those types of situations where they do have small salaries, but the majority of their income comes from large bonuses. How does that impact them when it comes to disability insurance?
So the beauty of an individual disability policy is you set your benefit based on financial underwriting. You elect what you want your coverage to be, what the monthly benefit, 5, 10, $15,000 a month. And the insurance company goes through financial underwriting, see if you qualify for that. The other beauty is that you have the right or the ability to get a future increase option rider that allows the policy to grow with you as your income grows. So with individual policies, you know what your benefit is, and it's there in the contract spec page. With group policies, okay, it will often say your monthly benefit is 60% of your covered monthly earnings to a maximum of, let's just say, $10,000 a month. For lawyers and other professionals that kind of have a low base salary and a significant production-based bonus or incentive comp structure, all right, it's crucial for them to look at the definition of what covered monthly earnings are in the policy. And oftentimes, professionals don't look at the full policy, the long-term disability policy. They get a summary plan description that often excludes or doesn't have a clear definition of what your covered monthly earnings are. It's just the formula. When you get the actual policy, that definition's not there on the front page either. It's buried deep in the policy. Okay. And it will
Hmm.
either say total compensation provided by the employer, and that's only if the employer elects that and pays more for that total coverage. Or more often than not, it says your base salary excluding bonus, extra, and all other compensation. So for a lawyer or doctor or high earning professional, what ends up happening is that income that is not their base salary is excluded in assessing what their
Hmm.
monthly benefit is. So
Hmm.
a real life example of this is an orthopedic surgeon I was working with who is making about $800,000 a year, has a $20,000, he's got three other individual policies, but his group policy says covered monthly earnings, base comp, excluding bonus and incentive pay. So for this doctor, okay, he was out, had surgery, was able to get back to work, is currently working at zero point 0.5 FTE, which is 50% time, half full time, and is getting 50% of his comp and hitting about 50% of his incentive comp because everything was cut down. All right. He has right now a 50% loss of earnings.
Hmm.
Okay. His individual policies are paying him the 50% benefit. The
Hmm.
group policy requires him to have at least a 20% loss of earnings to meet the definition of disability. Okay? Because only his base earnings were covered, he actually needs to have a 60% loss of total earnings to meet the policy definition of disability. So
Wow.
he's not even eligible, even though he's got a 50% loss of earnings, he's not eligible for partial
He
disability.
hasn't hit that threshold, so he's not
Hasn't
getting
hit the
anything.
threshold.
Wow.
Yeah.
Wow. That's rough.
Yeah.
So in individual policy disputes, have you ever had a case where own occupation came into play for an attorney, whether they could litigate or not litigate? We get this question a lot where there are some attorneys who are kind of more specialized types of fields. Has that ever
Absolutely.
come into play? Maybe tell me a little bit
It
about that.
it does. So, oftentimes, and it depends on the area of law you're in, but let's use litigation attorneys as an example. Okay. That there's an attorney I've worked with and attorneys I've worked with over the years that really have significantly cut back on what they're doing.
Hmm.
But if you're still going to trial or still heavily involved, or you're still doing, they look at the material and substantial duties of what you're doing. So with an individual policy, that doesn't have a generic definition, but as the occupations performed by you, they're going to look at your billing records and what you were doing the year or two before the disability occurred and assess what you're doing day in, day out.
Hmm.
So for one client who was a litigation attorney, he was still doing a handful of trials a year. Okay, so they considered him partially disabled. They didn't consider him fully disabled until, in essence, he fully removed himself from doing the trials and complex motion argument when things progressed.
Wow.
And there's case law out there that really looks at that being a litigator is more than just being, able to go to trial. You're doing depositions, you're doing summary judgment arguments, motion drafting. So if it has a definition of occupation as performed by you, they're going to do a more comprehensive analysis of what you're doing day in, day out to see how your income is generated.
Yeah. Have you seen things change kind of in a post-COVID world now that more is done by Zoom and, over the phone and less in person? Have you seen that impact claims from the insurance perspective?
What I've seen is companies, and this is especially true with physicians, with the kind of development of telehealth and telemedicine throughout the pandemic and post-pandemic, where I've had a couple companies try to push our clients off claim, alleging that they could go do telehealth.
Mm-hmm.
And the argument has been against that well, they weren't doing telehealth pre-disability. That was
Okay.
not a material and substantial duty of their occupation. Okay. So what they were doing pre-disability defines what their occupation is. So where it's become a little tricky and where I see things being a little murky in the future is if a physician is doing a lot of telehealth,
Mm-hmm.
let's say they're doing
Like I have
30
psychiatrists that do a lot of telehealth. How would that come into play?
psychiatrists, I
Yeah.
think primary care physicians, you're
I
saying
even
it.
have some radiologists that are just doing everything on their screen, working remotely.
Yeah. So what
Yeah.
ends up happening is if you're doing it pre-disability, they're going to look at it and it may prevent someone from making a total disability claim. I don't wholly, disagree if you're doing it pre-disability, that is a part of your
Yeah.
occupation depending on, but the argument that this new field is open, it's a new field
Yeah.
and
And
telehealth. So
yeah,
we've
I've
worked
used that
with,
example too. So let's say, again, let's say you're a litigator or let's say you're a physician, somebody who sees people in person and they are getting cancer treatment and they're immunosuppressed. Now they work from home doing it remotely. That would be considered different because they weren't doing that prior to the claim. That's what you're saying. Because
we're
that's
going
an
to look at,
accommodation, if you will. So they,
correct,
okay.
with an individual disability policy. All right.
Hmm.
It's going to be a more granular analysis of what they were doing pre-disability. Long-term disability is a kind of the Wild West.
Hmm.
But if they weren't doing that pre-disability and they have to stop what they're doing and transition into it, more often than not, we've been successful pushing back against that argument.
What about for a group disability policy? Is that sort of an accommodation that they create saying, hey, you're still working, even though it's remotely, we don't have to pay the claim?
So with group claims, if you remember, they are not true on occupation policies. So any work activity in your occupation or any occupation is going to get factored in.
Okay.
So if they're working, then it becomes purely a loss of earnings analysis. And I think the other thing that I didn't touch on a second ago about group policies and covered earnings is that the earnings that one has under a group policy are limited to the earnings provided by the employer.
Mm-hmm.
So if you have a lawyer or a doctor that has some other, side hustle, if you will, or they own other businesses that they're materially participating in, that other income is not factored in
Mm-hmm.
when they're looking at both covered earnings, okay, and what the benefit is. But prospectively, while on claim, it is factored in.
Hmm.
So I'll give you an example. There's a doctor that I've been helping that has his own medical practice. Okay. Then he also has a lab and another company that he's involved in, a consulting company that he's involved in. So he had a $20,000 a month benefit through the group policy that he set up for his practice. And he has two individual policies as well. So in assessing, and he's still working, it's a partial disability claim.
Mm-hmm.
Okay. But that comes down to a loss of earnings analysis. So under each policy, he has to have a 20% loss of earnings. For the individual policies, they looked at his income generated from the whole business structures that he had, each one. Okay, let's say it's $1 million a year.
Mm-hmm.
All right. And let's say he's making $250,000 a year of that is from his medical practice and personal services. The group policy he had only covers that
Yeah.
$250,000. All right. The 750,000 he has from the other businesses isn't factored in at looking at whether or not he meets the definition of disability. Okay. But it is factored in. Let me rephrase that. It's excluded from whether or not he has a 20% loss. They're only
Mm-hmm.
looking at 25 or 20% loss of the 250. Okay. And as long as he has income coming in from these other businesses for personal services, active income, he's never going to qualify for a benefit under that group plan.
Wow. Wow. See, I find it so fascinating because so many people aren't even aware of that. They just assume, oh, my group's going to take care of me. But there's a lot of holes in in that thinking. So,
Yeah, I think the biggest hole often kind of overlooked is that many of the group policies have a 24-month limitation on own occupation coverage. It'll say due to injury or sickness, you can't perform the material and substantial duties of your occupation and suffer at least a 20% loss for the first 24 months of disability.
mhm.
Thereafter, any gainful occupation. Some
Now
policy,
maybe explain to people what any gainful occupation actually means from that perspective.
yeah. So what's interesting is certain policies will actually include a formula. We'll define it, and it may say, you know, 80% of your covered monthly earnings still in any occupation. It may say 60%. It may say more than your gross benefit. So it has an actual, calculation. If
Hmm.
it doesn't have that quantifying language in the policy, the default is the Social Security definition,
Wow.
which again is a huge, huge difference
So
between,
basically, you need to be horizontal. Like you have to be in pretty bad shape.
yeah, I,
Um,
I always joke that if you can be a barista at Starbucks, no disrespect to them,
yeah, or a
you're
Walmart
not
greeter. Yeah.
exactly.
I mean, yeah. So,
Yeah.
which that kind of leads me to the next question, which is, insurers, when they look at different occupations, they sort it by occupational classes. The higher risk, the more you pay.
Hmm.
Attorneys actually rate probably the most favorably. Attorneys, architects, accountants, engineers. So, with that being said, should they use that discount for the less expensive rates should to get more benefit and stronger policy features?
Yeah, my thought has always been you want to maximize the policy that you own and you control. The other thing about group policies is that the employer owns them and
Hmm.
they come up for renewal annually. At any point in time, that coverage can be increased to help you or modified and reduced, and you have no real control over that as an employee.
Or it could be canceled. They might say, our health insurance premiums just went up by 30%. We need to cut somewhere. We're cutting the disability.
Correct. And the other thing that pops up is it's tethered to the employer. It's an
Hmm.
employer provided benefit. Some policies have portability language in them, which within, X amount of days after separating from your employer, you have to elect to continue the coverage. But that then there's other quantifying language often that'll say like if you join another firm that offers long term, you lose it, or because it was a group plan, it's an offset to the group benefit that you have. They'll reduce their liability from what the next policy pays. Um, it's not something you own. It's not
Yeah.
something that follows you. It's something that is tethered to the employer
And
or
what
the
percentage of these young people coming out of medical school, law school, et cetera, stay with their same employer throughout their career? It's very rare.
it's very
So
rare.
having something portable is critical. So you have control over your benefits and you can take it with you. The other thing too is I've seen people, they work at an employer and they think their employer is going to take care of them. And then they have an adverse change in health. Now they can't go out and buy an individual policy. And maybe they want to go out and start their own practice, or they want to go to a small practice that doesn't have benefits. They end up staying or they're stuck at their employer just to retain those benefits. So that's a real dilemma for a lot of people too.
That is, and the other thing, these policies, the group policies have pre-existing condition exclusions in them. The most
So
of them
maybe
have,
explain what that means. So somebody says, well, my group will cover me, but maybe explain a little bit more what that means.
as long as you're with your group and don't jump around, that there's something called continuity of coverage, where if I'm working for Jamie Law Firm, okay, Jamie and Associates, and I've been there for 5 years, and each year we switch coverage, you're fine. But when you first join an employer, okay, the policy typically says any medical condition that you've had treatment, symptoms, care, or medication for the 3 months prior to the effective date of coverage are excluded until for at least the smallest time period I've seen is 12 months.
Mm.
I've seen it beyond that in certain policies. So if you are someone who's, older in age or even young, and you switch from employer A to employer B, and something pops up with or flares up with one of the medical issues that you have, you can be pre-ex. And this has happened, a couple times a year. I get a call from a physician or a professional that did exactly that. Well, I left this group and joined this group, and they denied my claim because of a pre-existing condition. Okay.
So it wouldn't be covered for up to, like, say, 2 years. So let's say I'm a young associate and I join a law firm, but I'm type 1 diabetic
Mhm.
and I start having all kinds of problems or complications from that my first year that I'm working. That wouldn't be covered.
Not until you exceed what is defined in the policy as the limitation period.
And so a typical policy might say 2 years. So until I've
Typically, they
been
say
there,
12 months, but I have seen them up to 2 years. It really
okay.
depends. But they need to know that. It's
Yeah.
important because, again, I'm in the unfortunate position of seeing people coming in at the time they need to pursue a claim,
Yeah.
right? So I see the good, the bad, and the ugly. And it's not the rule where this happens, 10 times a month where I'm fielding these types of calls. But a couple times a year, this is the reality of what we're dealing with, is that
And most
someone
people have no idea. They just sign up for their group benefits and have no idea what they have.
and then they leave and they don't read to see if they're portable or not to have that gap in coverage till they get through to the new employer. And it's unfortunate.
Yeah.
Seen it with cancer diagnoses. We've seen it with arthritic conditions, you know, you name it. And
Yeah.
a minor, some things just pop up and flare up out of nowhere. And, the 3 month, 12 month, of course I'll be able to work with this employer for the next 12 months. It's just, I think I shouldn't say the prevalence, but the reality of disability striking professionals is not something that's widely advertised or discussed. Social Security has statistics out there that say 25% of young professionals currently entering the workforce will not reach Social Security retirement age. They will meet the Social Security definition of disability, prior to hitting age 67. That's 25% of the general workforce.
Wow.
Now, when you look at what the level of coverage is in own occupation, Social Security is any gainful occupation. So I don't have the statistical data. I'm sure the insurance companies have it internally with their auditors and everything, actuaries, but those are much higher. And it doesn't account for partial disability.
Yeah.
Dealing with the professionals I deal with, most of the conditions, the highest claim causation is due to musculoskeletal issues, about 30%. These are physical degenerative conditions that progress over time.
Yeah.
And it may be something that someone has that progresses to the point where they're totally disabled or partially disabled. But partial disability claims are huge. And understanding the coverage, understanding the definition of pre-disability monthly earnings, the formulas in the contract that are used to look back in time to figure out what the litmus test is to assess your loss of earnings when you are disabled, it's important.
Yeah, absolutely. All right, we're going to take our second break. Let me just click on the time and just see here. 46. You're doing great.
Anything you want me to drive home or focus in on?
No, you're doing great. I've just got a couple more questions and
Okay.
you're answering it really, really well. Okay. We're talking to Ethan Abramowitz from Seltzer and Associates. When we come back, the three numbers on a policy schedule that decide what actually gets paid and the riders that earn their premium. We're back with Ethan Abramowitz, who spent nearly 4 years defending carriers before spending more than a decade representing the professionals fighting them. Few people understand both sides of a disability claim this clearly. So an individual policy comes down really to three numbers: the monthly benefit, the elimination period, the benefit period. So from the claims that you've handled, which of these matter the most? So if somebody only has a specific budget, where do you think they ought to place the most emphasis?
It's a loaded question. But I think each one of them needs a separate analysis.
Okay.
So starting with the elimination period, all right, that's the number of days you have to meet the policy definition of total or partial disability before the benefit is payable. Social Security statistics show that about 40% of professionals will struggle to pay their normal living expenses within 3 months of becoming disabled and losing their paycheck. It jumps up to 65% within 1 year.
Wow.
So typically, the ideal number in my mind is 90 days. I've had clients with 365-day elimination periods, and that is a long time to wait for a disability benefit to start coming. They've had to tap into their savings.
Yeah, and especially if you have more expenses that come in, medical expenses and
Yeah.
all of that. Yeah.
And there are certain other factors that come into play. Certain states, have short-term state disability that it's not going to meet what your policy is paying that'll cover for a period of time. But the 90-day elimination period based on the data and the clients I've worked with, because not only is it your ability to float yourself for those 90 days, all right, there's a claims process that goes on here as well. And the companies move at the speed of information and the claim moves at the speed of information. And certain things arise throughout the claims process that may drag it out. So I've had claims that we've submitted the initial claim within 3 months that have taken up to 6 months to be approved.
And it's usually when they are trying to retrieve medical records or get more financial documentation. Yeah.
Correct.
Yeah.
And then as far as the benefit, your question about the benefit, the monthly benefit, this really comes down to protecting your financial stability. My thought on this matter is you need to have enough in monthly benefits to sustain what your objective is, which is your current quality of life. And I've had people that are significantly underinsured that have had to sell their homes,
Oh
go,
God.
um, raid the retirement funds and everything else. I had one client years ago that was making over $500,000 a year. He had a $10,000 a month individual disability benefit, didn't have any other coverage, and he was a surgeon with non-Parkinson's tremors. And his
Oh,
neurologist told him 6 months before he walked in the door, it's not safe for you to practice, you need to stop. This client walks into my door 6 months after that appointment
oh
and
God.
is still practicing.
Mm-hmm.
And during the conversation, I got his medical records, I saw the neurology records. I said, why are you still practicing? And his response was, I can't afford to not work. How is it that you're still working and not, well, I'm resting my hand on my patient's body to mitigate the tremor.
Oh God, I don't
Long
want to be
story
that
short,
patient.
yeah, short story long, long story short. Eventually, I got on the phone with, we had a three-way call with the client and his doctor, went over the records. Doctor said, yeah, it's not safe for him to practice. I've told him, a year ago at this point, he needs to stop. I then explained to him that your treating doctors told you it is not safe for you to practice. If something happens in the OR and you harm a patient, not only are you going to be civilly culpable, you're going to be criminally culpable at this point.
Absolutely.
And that finally got him to wave the white flag and stop. My biggest concern as I see the look on your face is I never want someone to be out there practicing medicine or doing something professionally that it's no longer safe for them to do because they're putting their financial stability ahead of what's right for their
Well,
client
and it's
patient.
risky. I mean, if something goes wrong,
Yeah,
like you said, you could be criminally
yeah.
liable for that. It's really not safe. Yeah, it's
So
really not safe.
that they really, and I know like the literature says 60% of their gross earnings, and that number is typically factoring in, tax liability. So it keeps them
Hmm.
at what their net earnings are. So the benefit should be 60% of what your gross earnings are.
Hmm.
Um, and then as far as the maximum benefit period, um, the longest you can get, the better. I mean, I've had the privilege of working with a lot of professionals that got their policies in the late 80s, early 90s when they had lifetime
A
benefits.
lifetime. I know. I have some lifetime claims. I have some people that are on claim for
Yeah.
lifetime.
And those are amazing products.
Hmm.
Now, and the insurance companies took a beating on those. And
Hmm.
that's why they've kind of gotten rid of those. I think there might be one company that still sells that rider at an extremely exorbitant, premium. But, you know, Social Security retirement age, if you look at the information out there, it's increased year after year.
Hmm.
I shouldn't say year after year, but over time, it's gone from like
Yeah.
62 to 65 to 67. By the time, I'm 43 right now. Who knows what it's going to be in 20 years from now?
Yeah. It could be
It could
70.
it
Yeah.
could be 70, it could
Easily.
be 80. So I
Yeah.
think in a perfect world, you should get the longest benefit period that's offered,
Hmm.
age 67, age 70. Um, I've got a client that I'm working with right now who's got, three different policies with three different companies. One policy is age 65, one policy maxed out at age 67, the other maxed out at age 70. And he's kicking himself. He's like,
Hmm.
oh, he's never going back to work in his occupation.
Yeah.
And he's like, gosh, like, why didn't I, and unfortunately, with insurance, you're not able to modify your coverage at the time of claim.
Yes.
So, taking the time and doing the analysis on the front end is really going to benefit you substantially. God forbid you ever need to file a claim.
Now, what about the other writers? How would you prioritize residual, increase options, and COLA?
Okay. I would say that the true ONOC, regular OC
Hmm.
definition, number one.
Hmm.
Residual disability, number
Hmm.
two.
Hmm.
Future increase option, number three, to allow the policy to grow with you. And COLA, I think, is very important. I am working with, um, I'd say since the pandemic, the influx of young female physicians that I'm working with that are having rheumatologic disorders
Yes.
has
I've seen a
ballooned
lot of
up.
them.
And you know, they're in their late 30s, early 40s. And it's
Hmm.
not just professional. This happened to my wife So it's like
Hmm.
I'm not just a spokesperson. I'm living the reality of it. My
I've
wife is
seen,
dealing
I have
with,
family members too.
yeah.
Absolutely. Hmm.
So these things, perfectly healthy, these things pop up, and you're looking at 25, 30 years of disability benefits that are going to stay stagnant if you do not have a cost of living adjustment.
Yeah.
I've got clients that have been on claim for 10 plus years. I've got clients who, um, have the COLA adjustment, and one of my clients' benefit was started at like 12,000, and by the time he got off claim, it was $20,000 a month.
Wow.
So it can grow significantly with you. And honestly, with what's going on with the economy, since the pandemic and inflation and everything else, a dollar's value today is not what a dollar's value is going to be tomorrow. So it
Yeah.
really protects you from inflation.
Yeah.
And I know it's expensive, but I think
Yeah.
it's worth it.
But it's all about priorities. So what
Yeah.
about like young associates, they come out of law school or med school, or they have a lot of student debt. Have you ever seen the student debt rider in practice? Like, has that ever come into play?
I've seen the student loan forgiveness rider. Um, it's an interesting rider. I'm I'd have to look at the specific definitions that they have. I forget if it's own occupation or if it's in any gainful occupation definition in that rider.
Hmm.
If it's in any gainful occupation definition, then really it's the same definition as Social Security. And a lot of the loan instruments have loan forgiveness in there.
Okay.
But it's a 5-year period, I think. So
And it
it's
depends on if it's a private loan or a federal loan.
yeah.
Sometimes, yeah.
Um, that's much lower down on my priority of what I think is crucial. It's a nice
Hmm.
add-on, but those, true on occupation, partial disability, the increase option rider, and COLA, those are the four I want to see in every policy.
Hmm.
Everything else is just nice. It's a
And
nice add-on.
especially when somebody's younger, I think it's even more important to have all of that because they have a much longer runway. So sometimes I have people come to me, they're 50 years old, and they just say, "Hey, I left my group. I need to get my own policy. I just got to
Mhm.
get my kids through college." They might already have some assets. It's also very expensive when you're 50. So
Yeah,
at that point, we prioritize things differently. But somebody who's very, late 20s, early 30s, load it all up because you
yeah.
can pull it back later. But because you don't know what's going to happen and you haven't paid down your debt and you haven't accumulated those assets, you have a long period of time of a potential claim.
Yeah, and you've heard me talk about, clients that have multiple policies with multiple providers. The other thing, I call it stacking, that, when you come out of residency or law school, there may be an enrollment limit that they won't offer you the policy that you're eligible for based on current earnings more than a maximum $10,000, $15,000 a month benefit.
Hmm.
But as your career grows and your income grows, that might not be sufficient to cover your financial needs. And you can always go out and procure, additional coverage.
Exactly. So, solo practitioners and firm partners that have no employer plan behind them at all. So, when a solo person comes to you with a disputed claim, what does their coverage usually reveal about how it was bought? Is it different?
When a solo practitioner has,
Like when they have like a disputed claim, if it's just only an individual policy, do the companies look at it differently than had they had a group and an individual policy?
they really look at every claim uniformly.
Okay.
There's a lot of, they're check the box organizations. If they can breathe an argument into denying a claim, they're going to try to breathe that argument there.
Do you feel the
Um,
same way for the groups as the individuals? Do you feel like the individual companies try to dispute claims as often as possible?
I think every case is fact specific and comes down to, the team that's administering the claim and the company that's administering the claim. What I will say is this is that the individual side is much more professional in how they administer the claims. They're more proficient and more quick with how they do it.
And maybe
Um,
more likely to pay. Yeah.
yeah, they are because again, it's a different standard. If there are legitimate reasons to deny a claim, they're going to deny the claim. Where I kind of fight a lot of my fights is in the gray area.
Mm-hmm.
And what do I mean by that is that, there's four elements to every claim. It's the policy that governs, the occupation, the medical, and the financial, whether
Mm-hmm.
it's a total loss or a partial loss. So oftentimes, the insured doesn't understand what is needed to pursue the claim. And some with, oh, I've got all these back issues, and they're only treating with a primary care physician, and they haven't gotten updated MRIs or MRIs to begin with. So you really haven't put together what's needed to substantiate the claim, and you're not getting appropriate care. Or, especially with physicians and people in general, they're not open books with their treatment providers. Sometimes they're a little too stoic. So they won't tell the doctor that they're struggling, you know, to perform surgery or to perform dentistry or to put their clothes on and get dressed and get out of the house. That they're not willing to admit it. Many of the professionals I work with have spent their entire life, to get to this point in their career or just to get in the door in their career. It's been their
Yeah.
life goal. And to admit that you've got a problem and you can't do it, that's a
And
monumental
they're
hurdle.
terrified. Yeah. And they're terrified that their whole financial world's going to crumble because they need to produce that income.
Correct.
So, so at what point should people contact somebody like you, contact an attorney, when they have that realization that they can't work?
So I think the easiest time and the most, beneficial time is if you're thinking that you need to pursue a claim. Sit down with an attorney, let them explain to you what your policy provides, the terms and conditions, especially if you have multiple policies or an individual in a group. Understand the differences in your coverage. So whenever I talk to someone, I review their policies and I provide a roadmap for them. This is what the claims process is going to be. This is the road ahead of you. Okay, these are the workups we need to really solidify the foundation of this claim. We need to check these boxes to make sure we have the best workups done with the most qualified doctors to really show that you've got an injury or sickness, you've got restrictions and limitations that are affecting your ability to work, and you're either totally or partially disabled. So having
Hmm.
that support lined up. It's if you're gonna do, I'm a measure twice, cut once person.
Hmm.
So when you submit a claim, when I work with a client, I know the information the insurance company needs. When an individual submits a claim on their own, they notify the company sends them claim forms, you send the claim forms back, then they start sending laundry lists of information they want from you. I get that information up front from my client. I hit the insurance company with that all at once. The claim forms, the medical, I gather that all on my own.
You just really organize it and package it well to,
But it avoids
yeah,
the delay.
yeah.
It prevents I call it starving insureds back to work because it's
Hmm.
like a tennis match where the ball is the burden of proof. And as long as they're asking for information that's reasonable, they're going to drag their feet in
Hmm.
coming to a final claim determination or issuing payment. So
Yeah.
getting all of that information to them, moving at the speed of information as quickly as possible.
And just
So,
optimizing it so that and taking the burden off of the insured, because I have clients that come to me and they're filing a claim and they're sick or they're injured and they just it's exhausting, and
it
the
is.
thought of having to do all of this can be really
It can be a
cumbersome,
full.
or they just avoid it because they just don't have the energy or the time.
There's that component. I was just talking to a client today who has been on claim for a couple of years, and ever since we got her on claim, we've talked to her and tried to pursue it. She doesn't have group; it's all individual about applying for Social Security, and she just
Hmm.
hasn't had. We've tried to connect her to our outside counsel that we use for Social Security, and today is the first day where she acknowledged, "Yeah, I'm ready to do this."
Yeah,
And
that's
unfortunately, it cuts
rough.
her look back, and she's aware of that. She just didn't have the ability to do it.
Yeah.
Um, so when you get a claim in and it's worked up correctly, the likelihood of the insurance company accepting liability is great. It's higher.
Hmm.
Um, but people that come to me after they've submitted a claim, we're now in a position where we're
Now
behind the
you're
eight
playing
ball.
defense. Yeah, it's
We're
rough.
just trying to get the information together, make sure everything was submitted correctly. If they didn't have appropriate care, if they hadn't been with a neurologist or an orthopedist or a physiatrist, PNMR specialist that can really put all the pieces together. Where
Yeah.
I've had cases where somebody comes in and they're so focused on this part of their body, you know, but they're not talking about the other issues that they have. And I said, I had a client that had, some vision issues. It was a dentist. The vision issues weren't so significant that they were blind, but they were really distracting for him. But he also had arthritic hands and Meniere's in his palm. And he was struggling to hold and maintain instruments. And that was discussed in his treatment records, but in his conversation, the vision was just the elephant in
That
the
was the
room
overwhelming. Yeah.
because it was consuming his life. It affected everything that he was doing. But again, it wasn't so severe that it would, wholly preclude him from working. It's since progressed, but we submitted both medical issues. They
Hmm.
have to look at the totality of the conditions.
Yeah.
And for him, it wasn't just A, it wasn't just B, it was A and B were so significant that he was totally disabled.
Yeah.
So sometimes that's an issue. But once the company kind of has dug in, if a claim is formally denied with the employer provided policies, the long-term disability, you have to file an administrative appeal within 180 days, or it's like blowing a statute of limitations. You've waived your right to pursue it any further.
Wow. Wow.
Um,
That's tough.
but with individual claims and group claims, once they've built up their position, you now have to tear apart their medical positions
So it sounds
and
like
then
there's
work.
a lot of strategy and a lot of people, they really do need the help to make it go smoothly because it can be a lot to consume.
Yeah, I always say listen, it's a little bit of investment on the front end, but if you've got a $10,000 a month benefit and a 20-year run
It
on
could
it,
mean millions, yeah. And it could be the difference between staying in your house or losing it, like you
yeah,
said. So,
yeah,
okay,
and
so now I've just got a couple of just little questions like that I'm going to just sort of pepper at you. So just tell me
rapid
the
fire.
first
Let's
thing that comes
go.
to mind. So, if you could put a one line on a billboard outside of every big law firm for the associates relying on the firm's group coverage, what would it say?
Read the fine print.
Very good.
Listen, if you're a lawyer, um, you know, I know so many lawyers that I've worked with, that I went to law school with, that I've worked with, that have figured out what I do. Like, yeah, I've got this policy. Can you just look at it for me? Absolutely. Let me look at it. And I'll spell out for them what it covers, what it doesn't cover, what the deficiencies are. Is it total comp? Is it not? And a lot of my friends have gone out and bought supplemental coverage. They've gone out and gotten
Hmm.
their own individual policy.
Yeah.
But lawyers, this is a contract. And
Hmm.
just like you would know the terms and conditions of your homeowner's contract or your auto contract, you should know what the terms and conditions are of this product.
Yeah. So finish this sentence. No attorney should sign a disability policy until they,
I've read the fine print,
there you go. Same thing, I
but I'll
know.
answer it more directly. They should review the definition of total disability.
Yeah.
They should,
So, so go ahead.
yeah, they should review the definition of total disability. They should
Hmm.
review the definition of partial disability. If it's group policy, the return to work incentives, they need to make sure it doesn't have a 24-month own occupation, any
Yeah.
occupation conversion. They
And
should
the
look at the
pre-existing part too.
pre-existing condition, the offsets, deductible sources of income, and the definition of covered monthly earnings.
Exactly. So a workers' comp attorney posted on Reddit that every client call is a late check, an unapproved treatment, a light duty fight, or anger over disability rating. Which of those fights show up in private disability claims too?
So I don't do workman's comp, but I saw the post. What I would
Yeah.
say is this, is that our clients rely on these monthly benefits. So workman's comp's a little different, but they still get monthly benefits. For our clients, there are occasionally delays in issuance of benefit checks once the claim is approved. Typically, when a claim is approved, the company will offer direct deposit. When direct deposit is set up, typically there's like a 3 or 4 day window every month where that check will be issued and transfer, and the funds are transferred directly to the bank account. With paper mail, it's a crapshoot.
Hmm.
That there have been issues with weather, with I don't want to say strikes, but you're at the whim of the post carrier. So there have been delays there. I've also had cases where clients are on direct deposit and there was a system reboot, or they have to check the box every month.
Wow.
So I had one client that literally, he was very financially well off, but he was totally disabled. And 6 months, I don't get an update. When the checks get sent to us, some companies send out monthly explanation of benefits, others don't. They send directly to the insured. But he wasn't checking his bank account. It was 6 months went by. He hadn't gotten a benefit. And he calls me. He's like, hey,
Wow.
I said, I told you this when you set up a direct deposit. Check your statement every month. We just called the company and they were like, oh, our mistake. And they, did a lump sum transaction. But it happens a couple times a year where they forget to check the box on auto pay. And there are other issues with the mail that happen. So is it something that drives me crazy? No, it's a reality of the occupation. It's part of what we're here to do and make sure that they're paying in a timely manner. And we have had cases where checks have been lost in the mail. And
Yeah.
companies typically have a policy where it's, 2 weeks, that if it hasn't
Yeah.
arrived in 2 weeks, they'll reissue. And I've had clients say, well, I didn't get my check. I said, do me a favor, let's wait till Monday. There was a holiday. There was a federal holiday, and then it was Sunday, and then just wait till Monday if it's not there, and it showed up on Monday.
Of course. Yeah.
So things happen when checks get put in the mail. Um, I think the second question about like doctor support, and if a doctor is questioning the disability claim, that needs to be assessed.
Mm-hmm.
Is the client's subjective concern consistent with the objective issues?
Mm-hmm.
One of the downsides of workman's comp is, and this is based on my general understanding of it, you have to treat with their approved providers.
Yes, exactly.
So a lot of those providers, may not be the most sympathetic to someone and, may have a little bias one way or the other. Our clients are treating with their treatment providers.
Mm-hmm.
And if there's a question or concern, go get a second opinion. But
Yeah.
if the reality is my client's improved and the doctor no longer supports the claim, hey, something's going on here. If it's not medically supported, I can't help you. So it's
Exactly.
it's it's flushing that issue out. That's kind of an exception to what I've seen. I have had a case where my client was dealing with multiple physical issues, and one of the specialists said, you know, I can't say your client's disabled, but I won't say she's not disabled. And I'm like, okay. I
Well,
said,
what the heck does that mean?
your treatment record notes, issues with gripping, grasping, fine manual dexterity. It's like, yeah, I agree with everything. The grip strength and the testing he did objectively showed it, but he wasn't willing to objectively, support the disability claim. But he
Wow.
wasn't gonna go against it either. So I said, okay. So you're ambivalent here. He's like, no, I just don't feel like I can say she's disabled, but I can't say she's not disabled. That's not my job. I'm a doctor.
That's so
She was treating
frustrating.
with, that was one specialist. She was treating with, a number of other specialists, one of which was physical medicine, a physiatrist who does whole
Mhm.
body and did her own exam on her as well as looked at the specialist records and the head, shoulders, knees, and toes. And we've never had an issue with that claim. But sometimes doctors don't want to be involved or don't want to make a definitive statement, or they're not there to address disability questions. And we see that a lot, and it's occurring more
Yeah.
and more where certain doctors just aren't willing to be involved in the disability claims process. It's getting your client to, a qualified physician. And again, we're not looking to just get our client to a doctor to support a physician. We want it objectively documented, quantitatively explained, you know, otherwise the insurance
Yeah.
company's just going to tear it apart. It's not
Yeah.
a generic letter that says Ethan Abramowitz can't work as an attorney signed by, Dr. Jamie. They don't care about that. They're going to do a
Yeah.
exhaustive review of those medical records. And that's the
So
other
give me,
reason.
oh, good.
Well, that's the other reason why I wasn't truly worried about what that doctor, his ambivalence, because he said, yeah,
Hmm.
I'm noting the restrictions, limitations. I just don't feel comfortable giving a position on disability. Okay.
Yeah. So give me one number. So of the attorneys who call your office with a denied claim, what share of them had individual policies and not just the group policy?
Is the question how many people just have one
Yeah,
policy?
the people that, so if they call your office with a denied claim, what percentage of them only had a group policy and what percentage are denied that are individual policies?
It's hard to put a number on it. A lot of the people I work with, again, I'd say 80% of my clients are physicians and dentists. So most of them have the individual policy and the
Hmm.
group policy through the employer. Um, I'd say it's few and far between where a person only has one, but I do have a number of clients that are in that boat.
Hmm.
The client that I was talking about the Social Security only had an individual policy. She didn't
Hmm.
have issues with a small group that didn't have a group policy. I've had people contact me that there was a doc that I spoke to a couple months ago that had an individual policy, but also had a policy from her employer that only had a $2,000 a month benefit. So
Yeah.
it's not just do you have coverage, it's what is the coverage?
Yeah. So you've worked on the insurance defense side. So what's a take you have about disability insurance that most insurance brokers selling it would push back on?
Take I have that insurance brokers will push back on. Huh.
Like what's sort of your maybe something sort of cynical or something that we hold to be true, but maybe on the other side isn't so much.
Well, I'll say it this way. I think insurance companies internally sort of develop an inherent bias towards claims. So they always look at things like what's the angle this person's trying to present. And there's a certain amount of, I don't want to say ambivalence, I don't want to say bias, but it's definitely there.
Hmm.
So I think that the maybe what I would say is that there is when you're out there selling these products, it's hey, in your time of need, they're going to be there holding your hand and they're going to be your best friend. The reality is when you need to file a claim, they're going to be scrutinizing everything.
Hmm.
And yes, they should be cordial and friendly. And I don't like to paint with broad brushes because every claim is unique and every benefit specialist handles things. I've seen the good, the bad, and the ugly with them. I have benefit specialists that I've got 10 plus year relationships with, love working with them. I've
Hmm.
got other benefit specialists that just started, in the past 6 months and you can't get them to return a call. And that's normally on the group side. There's a lot of turnover.
Hmm.
So I think it's just understanding that everyone's got a job to do.
Hmm.
Some people, approach it a different way. And the only way to make sure that things go smoothly is to make sure you've got the strongest position put together at the time of claim, that you have everything you need, you know, belts and suspenders.
Yeah,
Because if they can create an issue, they're going to create an issue.
totally agree. So, two more questions. Last month, in again, another Reddit poster put a self employed poster asked whether own occupation coverage and a benefit to age 65 are worth the extra premium. What would you tell them?
Absolutely. If you're self-employed and you're a single parent or a single income household, you're the breadwinner, you need to protect your income. And that individual as a business owner, I may also suggest a business overhead expense policy
Hmm.
that covers the expenses if they become disabled or partially disabled. They need to read the fine print and understand, have someone like you explain the benefits of a BOE business overhead expense policy. But I think there were a number of companies going back to the heyday of the lifetime benefits to the early 2000s. A lot of companies were offering these limited true and occupation periods to 24 months or 5 years, or limited coverage to 5 years,
Hmm.
10 years, what have you. And every single client I've had with one of those policies, once they hit that benchmark, why didn't I pay more to have the extended period?
Hmm.
I'm working with a client right now, and I was looking at his base policy, and it was originally issued as 5 years true or not coverage, and it was issued in like the early 2000s.
Hmm.
And I asked him, I said, please tell me that you know, wrote to them, and he's like, oh yeah, absolutely. That I'll send you the policy in the letter. I said, perfect. And sure enough, we have the letter that verified that it was now to age 65.
Oh, good.
Insurance, like I said, it's the one thing you never want to pay for. It's the one thing you never want to have to utilize, but you're never going to be complain about having the best available product in place should you ever have to rely on it. And some of the differences in, the monthly outcome or the premium is literally, a night out,
Mm-hmm.
paying for a babysitter and going out to dinner with your spouse or whomever, you know, that's the difference in premium price, one night out versus the peace of
Mm-hmm.
mind you have should you ever need to file a claim.
And all you have to do is talk to somebody who's either on claim or has been on claim to really understand that. Absolutely.
And I think that's the other thing about this industry is that, people will talk to you about a personal injury matter they had. People will talk to you about a homeowner dispute or some other type of litigation. People are very reluctant to talk about their disability and their
Hmm.
disability. There are people out there, and I commend
Mm-hmm.
them, but a lot of people they don't want people to know that they're disabled. They don't
Mm-hmm.
want people to know that they have a disability claim.
Especially the
Um,
more invisible types of claims, the
yes,
mental health claims, some of
yeah,
those that it might be more personal. Those are
absolutely.
tough.
It's
Mm-hmm.
extremely personal, and also talking about it is
Mm-hmm.
extremely painful.
Mm-hmm.
From time to time, the companies do annual, phone interviews with our clients. And I've had clients break down crying in the middle of in the interview because they've got to go through and explain, like, well, tell me about what you were doing before you were disabled. What were your hobbies? What were the
Mm-hmm.
occupational demands? And what are you doing now? Why can't you do this or that or the other? And they
That's
have to
so
sit there and go through and
painful.
explain. It is.
Oh,
It is.
that's really tough. Okay, last question. You have spent your career watching coverage fail people at the worst moment. If you bought your own policy tomorrow, what is the one feature you'd refuse to give up?
The true own occupation definition.
Completely.
I'll hammer back to it. I would push anyone who is looking to buy a policy, true on occupation, residual disability, benefit increase option, and COLA.
Hmm.
Those four elements are crucial for the
Hmm.
reason we've discussed previously. You know, the true on OC, if I can't be a lawyer, but I could go teach at a law school as an adjunct professor. I can do that and earn a living and do something I'm passionate about, or even consulting in some capacity, or teaching in a high school or whatever. Without the Tronock definition, I can't do that without having an offset. Or if I don't have residual disability, okay, if the policy has a modified ONOC definition and not able to work in your occupation and not working in any occupation, okay, if you work in some other occupation, you lose your benefit because you don't have the partial rider.
Hmm.
So it's crucial. And as I said earlier, 60-70% of the cases that I deal with have some component of partial disability. Only 10% of disability claims are due to injury, right? It's a small fraction. So that's a sudden
Wow.
onset acute event. There are
Yeah.
heart attacks, strokes, car accidents,
Oh,
things like
it's
that,
only
but
10% of the claims are accidents. That's interesting because I've
are
had quite,
injury.
again,
Yeah,
it's anecdotal,
absolutely.
but I've had quite a few. I actually think I sent somebody to you recently who was in a bad bike accident.
Yeah,
Um, yeah.
yeah,
And she's all torn up, really,
yeah,
and just awful and horrible pain.
yeah. No,
So,
that's
yeah, it's bad. So,
residual is crucial, and the increase option again, unless you're maxing out the product when you're buying it, you know, let the policy grow with you every
well,
year.
and protecting that insurability because we see so many people that have had a change in health. So they get their policy in their 20s and
Yes.
30s, and their biggest risk really in their 20s and 30s is an adverse change in health. And
Yeah.
then, come 40s and 50s is when it really comes to fruition. So,
Listen, if you were an athlete, if you were, someone who just runs or whatever, your body takes a beating. And some
mhm,
people don't, that there are all these hereditary, issues that exist as well that pop up over time. And yeah, the,
mhm,
the, the best time to get life insurance, the best time to get disability insurance is when you're young and healthy.
mhm. When you don't think you're going to need it.
Of course. Of course.
Exactly.
When we're
So,
invincible. When I still had
absolutely.
hair.
So that's Ethan Abramowitz, an attorney who has watched disability claims decided from the carrier side and the claimant side, and who understands better than almost anyone what the fine print really means once a claim is filed. What stays with me is that the outcome of a claim is often written years earlier on the day that the policy is bought. So, Ethan, thank you for showing us the end of the story so our listeners can think harder about the beginning. Thank you so much. This is really great.
Jamie, thank you. It was a pleasure.